How do you say it's December in your language? In South Africa, we say December. Oh well, welcome to December's price action. This is Stamp Index on a daily time frame. And before you watch this video, I want you to refer back to the very first video of June's price action. Just go through that initial video, and then from there go to the review of that particular video. All right, I produced two videos introducing a particular trading model, and I clearly said in that commentary that you can swing trade this. How do you swing trade Stamp Index? That was the introduction, okay, for the June's commentary. That's what I produced, right? An introduction to swing trading. But lately, you've been seeing me dibble and dabble in the lower time frames, like the 1 minute. Man, I came far with this market, bro. For you to trade the 1 minute time frame, you require a skill, right? So how do you obtain that skill? Well, you have to study yourself, right? I can wear different hats in the marketplace. I can day trade, I can swing trade, I can do intraday price action. Look at the commentaries. Look at the commentaries. I showed you a swing trading model that tends to happen around the 20th of each trading month. That's what I introduced in the June commentary. All right, a swing trading model. Around the 20th, we go in the opposing side. We are contrarian trade. So if you are going to go counter trend, how far are you going to hold that swing trade? If you're asking that question, well, look at the June commentary. What did I say in June? The low hanging fruit objective is the mid-month. Here in the mid-month, what was happening? Price was bearish. I came out here in the mid-month of November and I said, hey guys, I'm bearish on Stamp Index. And I came around here again and I said, hey guys, we are using this daily wick as a shorting opportunity, right? I introduced order flow in November's price action as well, teaching you what you can do with a market that is predisposed to go lower. I showed you order flow in the mid-month of November. So if I know that in the mid-month there's going to be this particular high that's going to form, algorithmically, price will make these certain highs and lows, for the market makers to position themselves, right? Whoever's controlling this market, they operate around these times. That's when I came out and said, look at this wick, right? And I said, here is the sell side liquidity. I showed you this wick and I said, we can target just the 50% of that daily wick or these particular lows here, right? So price delivered, came back up into this wick. In the June commentary, what do I say about this wick? It's an inefficiency, right? We treat it as an inefficiency. So we grade that particular wick. I'm going through a nostalgia right now. Wow, man. This is the swing trading model, guys, right? You can participate in this particular left side where you are going bearish. You can, yes. So we are using these key levels of this particular wick. It's a huge wick. It's extreme. So if we have an extreme fair value gap, we grade it because those particular quadrant levels down here is the lower quadrant at the 25%. The midpoint, that's your consequent enroachment. And up here is the upper quadrant, the 75%. we saw the respect of this daily wick in this price action. It was consolidating, but indeed it did respect the daily wick, consequent enrichment. This is a confirmation that we could have used to go short, right? Because we are primarily bearish in the opening of November. So I came out and told you what price was going to do, right? In the mid-month. So if we are bearish in the mid-month, we are going bearish, 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 bearish. When do we, exit in the marketplace? When do we decide that, okay, we are having a trend reversal? Well, we like to look at the 20th. The 20th should be a price point, a timing aspect element to it as well. The 20th, it tends to be a contrarian trade setup. That's the June commentary right there. Look at this. It tends to be a reversal, guys. And the best part about it, it's the easiest trading model that you can attempt in SnapIndex, because it literally has the easiest price runs. You can clearly see how it's moving. It's huge candlesticks that are going up, retracing against everybody who has shorted the market in the mid-month. If you were short in the mid-month and you did not close your position, let's say that you are a swing trader, so you've short in the mid-month and you are attacking the lower lows, right? The lower lows that we are attacking down here. Well, I can't access those particular lows. All right, I can't, because it has a limitation here on deriv, right? The TradingView platform has a limitation, but bear with me, right? So this is the left side, and the left side, we are primarily bearish. We are ignoring long setups, okay? But as we get to this 20th price action, what do I teach about it? The 20th price action tends to be a reversal model, right? It tends to go in the opposing direction. 70% of the time, it tends to do that. Let's make a bet, okay? My bargain is saying 70% of the time, SnapIndex tends to be a reversal around the 20th. You are welcome to look at the June and July's commentary, August commentary. I introduced it as well, the 20th. Oh man, September as well. And here is the November, right? It's doing the same thing, the very same thing. It's been consistent going into the opposing side. And the easiest objective is the mid-month. Why are they attacking the mid-month? Why? That's what you want to know. Well, I told you in the June commentary, I said to you, those guys that entered in the beginning of the month, here is a delineation for a new trading month. This is November 1st. Some individuals are looking at this daily CB as a shorting opportunity, right? They enter into that shorting opportunity right there. These are the big pockets, guys. They entered the marketplace. Look at the price run here. The big boys are in the play, and they're going to add into positions as soon as price action rebalances this inefficiency. It did it here, right? It reversed right here on the 10th of November. That's when it was bearish. It took out the 9th of November, boop, and then it went lower aggressively again. So clearly, smart money is entering the markets. They are gradually adding into their winning positions, gradually doing it. So anytime price action comes back to rebalance these inefficiencies, they are adding shorting opportunities right here. All right. So as much as price keeps on coming back to respect these key levels, They keep adding and adding and adding. But when it gets to this particular time of the month, they close all of their shorting opportunities. They close all positions and go bullish. They go counter trend. What are they attacking? Well, they are attacking some organizations that are looking at this particular high as a means of a resistance. So whoever's waiting for price action to come back here to use it as a resistance, they are late, my guy. They are late, because when price came back up here at the daily wick, consequent enrichment of this inefficiency, that was a valid short right there. I spoke about it. That's your mid-month high, my guy. You don't try to sell short here. You don't do that, okay? Prices may want to go a little bit higher. It may want to do that, all right? So what's up there? Well, it's the initial highs of November, right? How far can price go? It can go into the initial high of November. But the low-hanging fruit objective is the mid-month. If you're going for a counter trend idea, the mid-month high is the low-hanging fruit. That's your objective, and you're done for the trading month. You just go counter trend in the 20th. You could set your time alert. Set up your calendar. From the 20th, price action is going to reverse 70% of the time. What you do with that information, it's totally up to you. But you can swing trade. Okay? This is a swing trading model. So I'm going back to my statement in the beginning of the video. I said that I wear different hats. I can swing trade in the 20th. I can go bullish, counter trend right here, and target the buy side liquidity here of the mid-month. I can also go into specific trading days. In the Sunday 30th of November, we've begun a new trading week. What do I teach about a new trading day or a new trading week? Is that it tends to be parabolic volatility, man, entering the marketplace. Smart money has entered the building. Look at him go. Fast price action, man. So how did I enter into this particular trading setup? The 30 November month-end consolidation setup. How did you know, my man? How did you know that price action was going to be bullish? Because it's in the fucking commentaries, man. I've been telling you that we are going bullish after the 20th. So as long as the new trading month has not begun and the mid-month high is still open, I'm going to be continuing attempting long positions up until we get that mid-month high. That's what I'm doing. Okay, so I followed the program here, the staple of this YouTube channel. It's the contrarian trade model. That's all that you could be doing in StepIndex. That's all that you could be doing. You don't need to be in this part of the curve, the left side of the curve. You don't need to be down here. If this is the price action that you're not interested in, you can option for a counter trend model that is moving fast, it's quick, it's going into the intended direction, the liquidity is easy to see, right? The key levels right here, the daily wick here. We did not get rid of that key level. We used it as resistance here. What are the chances of price action using this daily wick as a support? Once we trade above it, can we use it as a support to go higher? Can we do it? Let's find out in the 15 minutes time frame. How did we trade inside of this daily wick? So in the 15 minutes time frame, what I want to introduce to you, it is the confirmation of a contrarian trade setup. How do you confirm that we are having a reversal? Well, number one, we associate the 20th price action with a market that is going fast. It's in a hurry to go somewhere. Before the opening of a new month, it needs to move. So we associate it with fair value gaps. Well, there are two types of fair value gaps that can occur inside of the 20th price action. Number one on the list, we have breakaway gaps. Why breakaway gaps? Because price action does not want to return to those inefficiencies. So it is breaking away, right? It's moving quickly. So it does not come back into those inefficiencies. It breaks away from them. It says, no, man, I don't want to go there. I don't want to go there. I'd rather go counter trend. So it's not coming back to inefficiencies. Here's one instance on the 24th, right? Price action. It said, this is the confirmation for a contrarian trade setup. All right. We never came down here. We dropped lower a little bit, but we continued going higher. Did we come back to visit these inefficiencies? Nope. Price action said, no, man, I am not going down there. I am breaking away. So if we have those breakaway gaps, that price action should not trade back to, because it has broken away, right? It's moving quickly. So those types of inefficiencies, we don't want to see price action return back to, because that would disqualify the contrarian trade setup immediately. All right. So when I see fair value gaps that are remaining open and not being visited around this particular time of the month, that's the contrarian trade setup. That's how you confirm it. That's how I see that, hey man, we are reversing. So that's the number one characteristic that is associated with price action in the 20th. The second inefficiency that you guys want to pay close attention, it's these inefficiencies that are nested with daily wick right here. Remember that daily wick? Well, I haven't taken out that daily wick, and this is the reason. Those daily key levels, they are old daily key levels, but we are using them. We are still using them. They're still salient. So how do we use these fair value gaps that are nested with the daily quadrant levels as well? Well, here is that inefficiency that I showed you in that little vignette, that little video. Look where it is associated. This is the new day fair value gap of the 27th. On the 28th, we've visited that inefficiency multiple times. Why? Because we are in a consolidation market. Price action can consolidate around the 20th price action. All right. I know it can be sometimes trendy. It can move really quickly, right? And not come back to inefficiencies. It can do that. But there are some instances that price action will take a moment to breathe. And when it does take a moment to breathe, we look at the daily wick quadrant levels, the daily key level. We transpose those key levels into the 15 minutes time frame. So the 15 minutes time frame, fair value gap, is converging with the daily time frame, 25% the daily wick quadrant level. Remember, this is the lower quadrant. Up here we have markets that are above the 50%, and we call that the upper quadrant. So down here, we see a fair value gap on the 15 minutes time frame converging with what? The 25%. This is not any type of fair value gap, guys. It's a converging fair value gap. It's bullish. It is representing what the daily time frame is trying to do. When price action comes back into these key levels, that's when we enter a long opportunity. So I showed you an example on the 30th of November. We began a new trading week. What do I teach about a new trading week? Is that it tends to be moving quickly. It tends to rush into liquidity, right? So we saw the opening of the 30th of November. We had this inefficiency that is situated at the 75% quadrant level. These are not random key levels, guys. We are talking about precision right here. So I just waited for price action to come back into the daily quadrant 75%. The delivery here was awesome. Price action showed me that it is respecting the 75%. It is respecting this fair value gap. These are converging key levels. Look at him go, man. My 16 points got hit beautifully. I did not hold this trade. I did not hold this trade. I just required 16 points and I was out of the market. But this is a daily key level. If you are swing trading this and you are holding on for dear life, there is nothing wrong with that. Here on the 30th of November, I was teaching you what to do when price action is in a consolidation. That's all. But the real me, the swing trader in me, would have held this long opportunity. I would have, right? I would be targeting the mid-month of November. Right here, price hit that particular key level. Clean, beautiful setup. It did not even retrace that much. Right, so here is the 30th of November, the New York opening range fair value gap. Right now I have my time zone switched to my Johannesburg. So I'm switching it back to New York. New York from 7 to 7:30, we are looking at a fair value gap right here going up. It's moving quickly. It's very obvious. It's huge, right? And one thing I love about this inefficiency is that it is printed with time, right? The opening range, it's moving quickly. So when it comes back into that key level, it's going to act as a support. If we are in a bullish market, then this key level on the 15 minutes time frame is going to act as a support, right? This inefficiency as well, this one here, the one that's situated at the 25% quadrant daily key level, yes, this one, it is being printed in London. London, guys, the London opening range somewhere here, that's where this inefficiency is situated with time and price. Time and price, right? Price comes back into that key level at what time? In the beginning of the new day. It comes back right here at what time? Look at this. At what time, guys? Somewhere also in the 10 o'clock hour. Friday the 28th, it comes back there. At 10:30, it is trading down into that inefficiency. What do I teach about the 10 o'clock hour? Look at the November commentary. Look at the November commentary. If you want to know what this 10 a.m. New York local time represents, it's a market that wants to go somewhere. It will prove to you at this particular time that, hey man, Look, here's the deal. I am supporting on that 25% quadrant level, and I am supporting as well on this inefficiency here on the 15 minutes time frame that is converging with the daily time frame. Whether you see me or you don't see me, just know, man, that I'm going to be moving quickly. I'm going to be moving fast. I won't make deep retracements. Gone, right? The 10 a.m. price action, right, guys? This particular time, you need to pay attention to it. How I introduced it, it's crazy, man. It's crazy. I said that this particular time is the second round of the news in the real world markets. That's what happens. In the real world, this particular time, the 10 a.m. New York local time. In my local time, in South African time, that particular time is like 5 o'clock. The second round of New York news are released, right? So the step index here, it is following the same pattern by portraying these ICT market price delivery arrays, man. It delivers the market with time, right? Here it is. It's creating a market structure shift right here. It's telling you that, hey man, I support it down here. Here's a market structure shift. We are trading at the daily wick consequent enroachment. Which PD array is close to the 50% daily wick? It's these particular highs here. This wick here, if you split that wick in half, it is situated at that daily wick consequent enroachment. You take that wick in half, you use it as a support, you can take out these particular highs here. That would be your trading model. If a market consolidation occurs around this particular time, then you are to use this particular model, right? If you want to hold your long position, that's still cool, man. It's still cool. But look at the time aspect here. This is London, 1:30 to 2 o'clock. What is that? That is the London opening range. Find the fair value gap in the London opening range. Find the fair value gap that I used to go long. I told you that I got long on the daily wick high, but find the fair value gap that I used to confirm this particular swing trade that attacks the mid-month high. This is beautiful price action, man. So until the next video, I will see you guys. Toodles.